Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
This is my favorite segment because we get to talk to real estate agents, my favorite audience out there, and they all know it. And one of the things we're going to talk about is tax-deferred, in the wizardry and all the problems. But I do have to tell you, Dan, I got a bone to pick with some of the agents, some of them. Okay. So don't be offended if you're listening. No, not you, because I know you bring this up.
Yeah.
But there's one thing that I take very personal, and I'm very emotional about real estate. And when I go to sell it, I'm excited. In fact, I want to go to dinner that night. You know what never comes up? It's 1031 exchange.
Yeah.
Like what to do. And in fact, we talked about this on our last segment. The time clock is fast. You got 45 days to make a decision, and no one ever brings this up. Mm-hmm. Scares the living crap out of me. Agents need to be talking about this more, right?
100%. Yeah. I mean, that's huge. I mean, that's the number one reason that exchanges fail. They don't stick to those timelines. Yeah. 100%.
Yeah.
So if you're a real estate agent listening to this, let's walk through that. When should you be engaging your seller and having that conversation about 1031?
So in a perfect world, you engage them at the very beginning. When you're taking the listing agreement, you want to find out what type of property this is. Is this your primary residence? Okay, if it's your primary residence, there's no 1031. Is this your second home? If it's a second home, there's no 1031. But if you hear, tenant or rental, or you notice that it's non-owner occupied, or the owner lives out of state, or the ownership is in like an LLC or a corporation or a partnership, those are almost always dead giveaways of the property is investment real estate. Or if I'm taking a listing with you and I notice the pictures on the wall aren't your family, that's probably a pretty good indication that this is an investment property. At that point, you should say, hey, have you thought about doing a 1031 exchange? Then that customer is probably going to say, okay, well, what the hell is that? And then you kind of just give them, the brief overview, and you direct them to an intermediary like us to kind of have the deep dive conversation.
Yeah.
But it's really important because you don't want to be that real estate agent that gets the nasty phone call after your client paid taxes the next year. Mm-hmm. And it's like, well, why didn't you tell me about a 1031 exchange? That's the worst.
Yeah, that's got some liability for a brokerage, I think.
Possibly,
too.
yeah.
I always say to an agent, if the property is an investment property, stop. Mm-hmm. Stop. Just stop for a second, because there's a couple of things that we've got to get sorted out, right? Number one is, what is their plan? They're going to sell this property and then do what? Yep. That's the first thing that as an agent, you've got to figure out, because, if your customer is going to take the money and they're going to go buy a boat, okay, they can do that. That's their money. They can do whatever they want. But if their objective is to build wealth or buy more investment properties or something like that, and they don't do a 1031, they just literally lost 40% of their equity on the sale of the original property. So,
that's right. Well, and the real estate agent lost the chance to represent them on the buy side as well.
Yeah.
Right? So it's like when you're working with an exchange client, not only can you represent them on the property they're selling, but also the one they're buying, but you also are working with a really motivated buyer, right?
Yeah.
Because that's the angle that as a real estate agent, you'll want to work with investors doing 1031, because how many times have you been on a listing or you've been out with a couple, right? And they're like, oh, well, I want this school district, and the husband wants that school district, and the wife wants, a Victorian, and the husband wants a French provincial. They can't agree on anything. Well, with 1031, it's like, none of that matters. Yeah. Is it going to cash flow? Is it going to appreciate? Right? So, you're working with really motivated buyers that are under a really short amount of time to make that decision and purchase.
Yep,
so
definitely.
So yeah, you're right.
Yeah. The other
stop.
The other thing I share with them is to have your customer reach out to their accountant, right? Talk to their CPA, whoever prepares their taxes. You don't need to be in the conversation because you're not licensed to do all of that. So don't do that. But just make sure your customer does.
Yeah.
Right? Because they're probably going to echo something that you're going to learn, which is they should do a 1031 exchange, right? Like and now you don't have to be the one that like tells them this, or pushes them into making that decision. Their accountant's typically going to bring it up like right out of the gate, right?
I actually hear this pushback from real estate agents pretty often.
Yeah.
Sometimes real estate agents think that just by talking about 1031, they're giving tax advice, right? They can't give tax or legal advice. Guess what? I can't give tax or legal advice to my clients either, and I am helping facilitate a transaction that is a direct part of the Internal Revenue Code. So, like, just by bringing up a 1031, that's not giving tax advice. Like, I'm not asking you to sit down and calculate their taxable gain and figure out how much they're going to pay back to the state and to the Fed. All I'm saying is, if this is investment property, let's talk to a tax professional.
Right.
Let's figure out if you're going to go buy more real estate, let's talk about a 1031, and here's someone that can kind of lead you to that through that path. Yeah.
Yeah. So when you're talking to agents, like what are the key things, right, that the agent should keep in mind when they take a listing of a person that's getting, potentially going down this route of 1031?
Yeah, the first thing is don't forget to engage your exchange company, right?
Yep.
Because you have to involve a company like us before you close.
Yep.
So I always tell real estate agents, if you don't have a relationship with an intermediary, with an exchange accommodator, get one. We'd love to be that person, by the way.
Yep.
But if it's not us, develop a relationship with somebody. Also, have yourself a good real estate CPA. I mean, the person I refer the most business to, CPAs. I have like I don't have a Rolodex anymore, but I've got the metaphorical Rolodex in my iPhone, and I refer out CPAs all the time. But you really need to have those two things: have an intermediary, have a real estate CPA kind of in your back pocket, engage us as early in the conversation as you possibly can, because again, we can help strategize with you. Like with those timelines being so short, we've seen a lot of clients of late take out a longer than normal escrow on the one that they're selling. Yeah. Hey, you have a property that Marvin wants. Mm-hmm. Marvin might be willing to wait 60 days instead of a 30-day close. And that gives you as the seller an extra 30 days to go shopping for your next property before you even close the one that you're selling. It's just little tips like that that we can help, provide guidance on that may actually help get that deal done. Yeah. Because we're all in real estate. The last thing we want our clients to do is sell, cash out, pay the tax, because 9 times out of 10, that money's not coming back into real estate. It's going into the stock market. It's going into that yacht. It's going into the new Ferrari or whatever the case may be. That doesn't benefit anybody in this room. So.
Yeah, or make a bad investment as a result of timing. Right. Correct. We talked about that earlier. It was just like, if you're meeting with a seller and they're an investor and they're interested in doing a 1031, you should be immediately putting new properties in front of them. Yep. While the listing period's going on, right? While you're looking for the buyer of their property, they are a buyer at that time, because they have to go through this identification, and they have to be willing to identify. I mean, you can identify right away, right? So I mean, you could have your property under contract, you're going to sell it, and you've identified. Like you can do all of that simultaneously.
In fact, most of our customers that complete valid exchanges actually close their replacement property before they even get to the end of the 45 days. Yeah, on average. Right. And that is indicative of I was out shopping with my real estate agent while I was in escrow with the property that I was selling. There are some cases where I have clients that close the one they're selling on Monday and the one they're closing on Tuesday. Yeah. I mean, it can happen that quickly. Yeah. But yeah, you do want to start shopping and start shopping aggressively. Yep. Absolutely.
Yeah, I think the other misconception I think with 1031 is leverage, like the use of leverage in a 1031. I think everybody thinks that it's the transaction has to be all cash to all cash all the time.
Does not. Absolutely does not. Yeah. In fact, a majority of our customers do have some level of debt on the property that they're selling, and then subsequently on the one that they end up buying. So if you've got leverage on the property that you're selling, and how much debt you have has nothing to do with how much profit you've made, right? Sometimes our clients confuse profit and debt and whatnot. You just have to make sure that if you sell for $1 million, you buy for $1 million or higher. If you sell for $500,000, you need to buy for $500,000 or higher. Doesn't matter how much debt or equity you have in that property. You need to buy for $500 or higher if you sold for $500. Exactly. And reinvest all that equity. Take all the cash from the sale of property A and roll that into property B. Yep. And you'll have yourself a nice, neat 1031, fully tax deferred. Yeah.
In fact, the leverage is probably how you continue to graduate up into property. So don't be afraid of leverage.
Yeah, absolutely. Absolutely.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.